Actually, since I'm getting on a little early, I wanted to do something that I haven't done before that I thought would be really helpful for you early birds. Something you can do, I think, that actually really helps your trading. So let me pull up a the trade we had earlier this week. So I guess what I'm talking about here is I like to talk a lot about emotions and how they're very important to your trading. And the whole process about getting better at trading is about getting better at not letting your emotions control you. And there's kind of a process to that, right? Of like your emotions just control you and you can't do anything about it. And then slowly over time, you get better and better at realizing and stopping yourself. Um, and one way to do that and get better at that faster is something called visualization. And so essentially what you do is and this is something that I think is really good to do every morning, especially if you have something like FOMO or something, impulsive that you do that you consistently see over time really controls your trading and damages your trading, to where like a big example for me was I would see, like, let's say something like this big red candlestick. I would see that huge candlestick come out of nowhere, and I would feel FOMO and want to jump in based on that candlestick. Because I think, oh my God, we have this trend and it's all of a sudden accelerating to the downside, and I'm going to miss this move. Or if I was looking for, a trade and all of a sudden a huge candlestick came out of nowhere, I would FOMO into it. And initially, I would impulsively jump into it because that emotion hijacked my brain. If there's a book like that talks about like your two sides of your brain, and it basically hijacked. I think the book kind of calls it your lizard brain. Um, and but it essentially would just control me, and I just jump in, right? I wouldn't be able to stop myself from just entering in an order when technically I didn't really want to. And so what you can do is pre-market is essentially, you can close your eyes and visualize um sorry, this is just to confuse you guys, this is just a recording. Um Essentially just visualize that point in the market to where you feel that emotion, and you can close your eyes and like really put yourself in that spot, and you can start to feel your heart rate pick up. You start to get kind of um, you can feel that emotion, and essentially it's just training your body through the muscle memory of feeling that emotion and not acting on it. And so that, I think, is something that you should try and do every morning to work through those emotions faster, because over time it's essentially practice, because you don't necessarily see it on the charts very often. But if you can just do that every day, like once a day, especially before trading, it'll almost warm you up to get better at doing that. And so, like even for me, one thing I could do right now is this is the recording of a trade I took on Monday. Is I can go back to this part in the trade where I saw, okay, I want to enter in here and I want to get long, and I felt nervousness, and I almost um, didn't jump in because I was a little nervous. And so I can close my eyes and think about that, put myself in that position, and instead of letting that nervousness take over, accept that I feel that way and enter in on the trade, put in the order, and not let those emotions control me. And so that's something that's extremely important to improve your trading over time. So that's definitely kind of like an advanced thing. Um, we're kind of down the road at getting better at your trading, but it really helps if you can kind of, it just helps practice essentially trading while you're actually not doing it. Yeah, falling back on logic really helps too. Um, I think a lot of it's like, there's whatever works for you in some ways. Um, and I think logic can be really helpful in terms of like, okay, this is a logical spot to get in. My strategy tells me to, and that can really help you get in. But also, when you're in that state where it just hijacks your brain, you can't control it. Logic doesn't help because it happens so fast. Literally, there's a second between you feeling that emotion, it triggering you, and you clicking the buy button. And so you don't have time for your logical brain to stop you. It can help later when you've kind of broken past that logical thing, but um, until then, until you're past the impulsive part of it, you kind of have to just focus on dealing with the impulsivity. Yeah, I did start a second stream today just for the shorts feed. So if you're on that and you want to watch it in horizontal, just go to my channel and click to the main horizontal one. But I was just kind of testing and playing out with that. Okay, so kind of got 15 minutes to go. Looking at news today. Your cat's chasing my cursor. Well, hopefully it doesn't actually scratch the screen. I don't have a cat. I don't know if I can handle a cat on the computer desk, or just the fact that they, climb onto you in the middle of the night while you're trying to sleep. So we have news this morning, 9:45. Flash manufacturing PMI. If I go to my little secret sheet here, flash manufacturing PMI and service PMI do cause movement. They are orange. So 15 minutes into the market open, we do want to be aware of that. That's kind of why I have this red line here. So that's somewhere to pay attention to. There isn't pretty much any news after that. This week is pretty low on news now for the rest of the week. Tomorrow is pretty minimal news as well. So, but like we've had in the past, a lot of these news events aren't actually doing much to the market, just because things are so tied to oil right now. And whatever oil does, the market kind of does the opposite. And eventually in the next, because from my understanding is macroeconomics wise, is it takes a couple months for the effects of high oil prices to actually start affecting the market. And so the longer, if we look at like a daily chart of oil, the longer we kind of stay at this elevated state, the worse it is, down the road, like a few months in advance for the major markets. But right now, I don't think it's too early to see the major macro effects. And so really what we're looking at is really just the price movement of what oil is doing. What is it doing on price action wise? And to me, I think this looks like we're kind of bottoming here. And I think it looks like it's trying to kind of break out to the upside. Maybe oil comes up here, retests this level. And so, this is on a 15-minute chart. I think it's totally reasonable that we break to the upside here. There is kind of this weird manipulation we had overnight. But that's something I definitely want to be watching this morning and seeing how we kind of play out off of this. Yesterday we kind of had an uptrend and it just slowly grinded higher. But the market slowly grinded higher too. So I think if it's not really doing that much crazy movement, it might not affect the market too much. But big picture to kind of go over things quickly again is, the markets we're still in this sideways range. I think the major uptrend is over. Now we're kind of seeing, okay, what do we do now? The market's kind of looking at each other. And NASDAQ, NASDAQ is kind of, it's definitely breaking higher. And so I think this insanely powerful uptrend is over, and we're in more of a volatile uptrend. And who knows, we could top out here in reverse. And so I think we're in a state where I think we can take trades either direction very well. I think shorts or longs are on the table. There's really good back and forth movement over the last few days, which really allows for my strategy good reversal trades. So from what I'm seeing is there's kind of just even this, there's just like a slow grind uptrend that we keep coming down and testing. And then on a 5-minute, if we kind of look at the overnight action, we had a big spike here and it's already given that back up. So there's not really a potential for a good reversal based on that. I'm not really seeing. I think this morning is kind of gonna have to be a little bit of wait and see what the first 15-minute does. Just because it's kind of like yesterday. Yesterday we kind of just opened in this. And it chopped for the first 30 minutes and then spiked and then just kind of went into major chop mode and slowly grinded higher a little. So it seemed like it was kind of getting in a state where it was getting a little trappy. This is the S&P 500 yesterday. It was just crazy choppy for the majority of the day right here. That is horrible movement. And so even in this market that I think is very good for trades, it also has the potential to just sit there. And so got to be flexible. And so I'd like to see us kind of spike up here, test this overnight, sell off. I think that would be a great spot. And then same thing to the downside. I think if we got to move, just because it seems like with the market being range bound, it's more likely that moves and spikes in one direction actually fail. And I think the potential is it spikes up and then, that's a trap to the top side. And then it starts kind of a more of a potential larger downtrend and we can get a big move. Does the low news week lead to less volume and volatility? Sometimes. It kind of just depends, honestly. Like right now, there's a lot of volatility already in the market. And so the news isn't affecting it as much. There's already a crazy amount of movement and volume. Like we're still at such heightened levels. Like we're definitely coming down. Like if I pull the VIX up here, the VIX has come down a ton. And the VIX is like the volatility index for those who don't know. And it pretty much just is a measurement of how much volatility is in the market. And so you can see it'll spike, and these spikes always correlate with the market selling off. And so we've had a big sell off in this area. But, over the last, this shows it really well. Over this time period, we've come down a lot. And we've kind of come down to lows. Now, just because it's down here doesn't mean you can't read it like a normal chart, like it's going to bounce back up. That's not how it works. It can stay at low levels for a long time. This is on a 5 year. You can see it can just sit at extreme lows for a long time. And so that can be a signal that, things have slowed down. But also, keeping in mind that on a big picture here, the S&P 500 on a daily chart, this is a crazy overextension. And so there is potential to give some of that back up in a violent move. It seems like right now it doesn't want to do that. It looks like we're kind of holding that momentum. If the market's strong enough, it'll just flag out for a while, burn off some of this overextension, and then continue higher. It could just do this for a month and then continue higher, And so just because it's overextended doesn't mean you want to just blindly short and assume that it's going to go, lower. We got a couple minutes before the market opens. Let me know if you guys have any questions. Actually, I wanted to, let's see. Never done this before, but I actually wanted to do a poll and to see kind of what you guys think for the day. Do you think we're going to be bullish? Do you think we're going to be bearish? And I'm thinking in the context of like, what do we do in the next 2 hours? How does the market open up? Do we open up and just cruise higher? Do we kind of, are we trapping people to the upside, or do we just kind of chop? What time do I usually get up to make my lines and analysis? I usually do it kind of just right at the start of the stream, but I try and, because I do it early, I try and reiterate it a couple times. I'll do it here in a couple minutes just so, people showing up a little later don't miss out, because definitely those are a big importance of what's going on. Yeah, it's very split. It's pretty much split 1/3, 1/3, 1/3. So to me, that means nobody knows. And we're gonna likely, I think my bias is still choppy. I think we could get moves in a direction. But in the overall sense that it's likely gonna reverse. And I think, there is, I would say, a slight bias that we're more likely, if we're going to trend in a direction, we are more likely to trend to the upside. I think looking at NASDAQ is clearly still in an uptrend. But I think it's definitely more in this kind of an uptrend. So I definitely think today is the day to just be very open to anything happening. Okay, let me look at a couple of questions before you open. You guys do need to subscribe to ask questions, but feel free. I'll try to get to them as many as possible. There is news today, unemployment claims at 15 minutes after the open, so we definitely want to be aware of that. Fair value gaps, to quickly explain them, the whole idea is the market has a very fast move in one direction. You know, a healthy market has pullbacks as it moves up, and an unhealthy market just shoots up in one direction. And so the idea there is it gets so overextended to the upside or to the downside that it has to have a pullback of some kind to become healthy again. And so generally with a big overextended move is it'll generally give back to where that unhealthy move started. And you can see, you know, here is the market kind of was going in a clean, methodical level. And then all of a sudden, it just accelerated to the upside. And so to me, I would assume if this gives back up and reverses, this would be a target down here. Now, granted, you can have the unhealthy moves. They can have strength behind them to where the market holds and just keeps going higher. But, you know, to me, like here, this is when it does reverse and it doesn't have the strength to hold up, it generally gives back all the way down to where it started. And so that's, I would say, my biggest overall idea of where I look for reversals. I look for these unhealthy moves, look for reasons to see that it's failing and it's going to reverse. And then I look to enter in a trade here and capture the move down, generally to, you know, this would be my initial soft target. And then if it's going to continue lower, I'll try and trail and hold. But this is generally a very good target for those unhealthy moves. And then the fair value gap indicators just kind of give you a nice, easy signal of like, oh, here's one. But you can also just look at the candlesticks and you'll be able to tell. So the market's actually open now. I think the market fills your fair value gaps on any chart. It's kind of just it's something that works on any time frame. That's why I like reading price action and just market price, is because it allows you to go and read pretty much any market or any time frame, because a price is a reflection of what's going on. And so that's just a very easy way to, once you kind of understand how to read price, you can pretty much read anything. So I want to quickly go over everything for people that are just showing up. If you guys could hit the like button, that would be really appreciated to try and just push the stream. So again, kind of similar if you've been here last few days, the uptrend I think is over. We're kind of going into a sideways, kind of bullish trend, at least on the NASDAQ. S&P 500 is very, very similar. And so that major uptrend is slowed. We're kind of going into, especially on the S&P 500, it's very just volatile back and forth, which I think is good for trading, but also can lead to some choppy times. Yesterday, we had extreme chop where I didn't do anything. And then reversal zones I'm looking for. These are the two kind of major ones on the S&P 500 on a 15-minute. And then to the lows, you know, we kind of bounced off all-time highs here on the S&P 500. And then there's kind of, you know, I've kind of marking these for overnight lows. And then I'd say there's this uptrend that I want to keep track of as well. And NASDAQ is very similar. I'm marking these are all-time highs on the NASDAQ. The S&P 500 actually hasn't made new all-time highs, so it's actually a little more bearish. And then, kind of just looking to see which way we want to break this morning. Going to kind of a 5-minute. We had some overnight volatility. Some random kind of spikes here, but I think it's still kind of showing choppy movement. So this morning, I think I need to wait. I want to wait to see if it kind of spikes in a direction and look to reverse that spike. Just because the overall market is pretty sideways. And I think it's likely that we reverse that. If we spike to the upside, I'll probably be a little more cautious looking for a short, just because the overall bias, I would say, is choppy to bullish. But I think there is still potential to go either direction. And so I'm not going to just discount that. I got 2 trend lines here, and that is not ideal. I'm just going to leave this one on a 5-minute. Too distracting on 1 minute. So the market's open. We do have news 45 minutes after the open right here. Might cause a spike, but the market's, has enough volatility that it might not do anything. So I think it's kind of just kind of got to see. We've been, for the pre-market, since the last hour, we've been pretty choppy here. Same with the S&P 500. So just got to wait to see it break out of that chop. I don't like to enter in a trade and chop. It's very easy to get on the wrong side of the market if you do that. Your friend the future is going to go up. Okay, that's good news. Looks like you're right so far. So anyone just showing up and new, I'm trading the S&P 500 futures. The main S&P 500 index, and I'm essentially just day trading it and looking for reversals. That's kind of that's my bread and butter. I kind of have a little checklist here I can pull down. And that's pretty much what I like to do every day. I like to keep it simple, not overcomplicate things, just because otherwise trading is hard. I find scalping doesn't work for me. I find looking for more swing trades and going with the bigger trend that's happening in the day after kind of the first 15 minutes plays out works a lot better for me. The red vertical lines are just times I like to look at. So the first red one I can delete. That was the market open. The second one here is actually when news comes out. And then I guess it's the first now since I deleted the first one. But this one right here is news. We technically have news. I'll actually bring it up again since I didn't bring that up. We've got flash PMI manufacturing news coming out. And so all you really need to know is that this website pretty much just says it's orange. From my watching it many times, is it can cause a spike in the market. And so it comes out in 6 minutes. Comes out 15 minutes after the market open at 9:45 Eastern. And so that could cause a spike in the market. The market could also do nothing from it, just because we still are, we've already moved 10 points this morning. The market's already moving. We have enough volatility these days that a lot of the news releases aren't actually doing that much. So we'll kind of see how that plays out. But we might, a couple minutes into it, we might sit there and chop a little bit. And then 10 o'clock is just a news time, or not, it's a common news time, but it's a common time where the market likes to just reverse. 30 minutes after the market opens, it likes to kind of move in one direction, and then it'll hit that time and then kind of reverse. And so that's just something I've noticed over time. Are fair value gaps on higher time frames better and more respected? I would say they're more all respected, but it'll just take longer to play out. Like if we go to a daily chart of the S&P 500 and I turn on my fair value gap indicator, there's massive ones here, and so this is where I don't have it on for this because it's like I can see just with my own eyes that it's very overextended here, but it doesn't mean that on a 1-minute chart I should just be blindly betting short because there's this massive fair value gap on a daily. This could take a long time to play out, or it could just kind of not. I think if we do get a pullback, I think we definitely come down to here. I think this would be a good target somewhere in this area for the market to bottom if we do get a reversal in a big way. I don't think we would go down to here unless there's a massive major trend switch. But I think just down to here, price action wise and market health movement wise, that would be totally reasonable. But if we're just going to continue to blast off, we might not fill those, and they might, not be worth watching. Can I put a date on my screen to help get you on the right live? I mean, YouTube should be able to show you that it's either live or it's a recording. I technically, for the fair value gap indicator, I technically have a custom one I've made for NinjaTrader. But NinjaTrader also literally has its own fair value gap indicator that does pretty much the same thing. It just, I can just adjust it a little bit. There's a couple of adjustments that I have in there. It just allows more customization. So sadly, yeah, Mac for NinjaTrader. For anyone, this platform I'm using is called NinjaTrader. It's really good for futures. Sadly for Macs, you can't get one. You can't get the desktop version. The only way I've seen people get around it is you can get what's called a virtual machine, I think, which is basically some kind of application that allows you to essentially pretend that you're running Windows, and it allows you to essentially download NinjaTrader. I actually asked NinjaTrader a week or two ago if they were ever going to come out with Mac, and I didn't really get a good answer. So I would assume that they would make something for Mac at some point, but yeah, that's above my pay grade. Do I think pre-post trading hours respects key levels better than regular trading hours? I like to. I try not to think of it like that. I like to just think about it as the most recent levels. Like the most recent level here is the pre-market high that it put in. And so definitely I want to see how the market reacts to this high we put in pre-market. We're coming up there, and that's essentially the first spot I see that the market could reverse. And then after that, I just kind of go further back in the chart, like yesterday's high here. Um, oh, just closed something by accident. Um, and so that's gonna be the next one I look at. But I will say I don't go back. We don't really have many to look at here, but I don't go back like weeks because at that point it's been so long since the market has touched that level that things have likely changed. I'll look at it to just make sure how it's testing that level and keep it in mind. But we just had news come out, not really doing anything, it looks like. But I don't see it as something that's as important to look at. I really like, for overall trend direction, I really like to use the 15-minute chart. And the 5-minute as well. It just, because I'm trading on a 1-minute chart, it allows you to just kind of zoom out. And I don't really use any crazy indicators. I just say, okay, just look at what we've been doing. Right now, the last few days, it's been choppy. I don't think you have to really get complicated with it. The market repeats what it does most of the time. And so if you're in a sideways trend, it's kind of like the saying, the trend is your friend. And currently the trend is kind of choppy sideways. And so it's better to bet that it's going to continue doing that. It's way easier to predict the market's going to continue doing what it's been doing than trying to go against that. And it's kind of funky because taking reversal trades does seem counter trend, but I'm only taking them when the trend makes sense that it's going to reverse, when the big picture actually shows that a reversal is possible. And so that seems maybe like a little bit of mental gymnastics, but hopefully that kind of makes sense. So we're definitely still in this just minor trend here. Just kind of like slowly grinding higher and giving back, and looking like we want to test the pre-market levels. Actually, on the NASDAQ, we've actually just hit that pre-market high. And then I've got kind of a bigger level up here that marks kind of where this crazy spike happened last night, and then the actual all-time high. If this kind of accelerates here to the upside, hits this area, and then starts to kind of show that it's reversing, that would be a really nice trade. Because to me, it's healthy, it gets unhealthy. And a lot of the times the end of a trend, things get unhealthy and then it snaps back. And then, that can start, that's essentially the start of a reversal. Yeah, this market, I would say this market's tricky. I mean, before this week, I hadn't taken a trade for 2 weeks. Actually, I took one last week, but before then, I hadn't taken a trade for 2 weeks just because of um, the uptrend was crazy. To me, it wasn't tradable. Obviously, hindsight, if you bought anywhere, you made money. But to actually make money consistently, to me, it wasn't tradable for my strategy. And, you know, that's all you can do. You can trade based on your strategy. You don't want to react to what the market's doing. You want to wait for it to fit what you want. You know, right here, like I'm not looking to chase this to the upside. I want to kind of see what I just talked about. I want to see it get a little frothy to the upside, get too excited, and then see a clean reversal of that. And then see a lower high put in to me, which shows a the trend starting to reverse, and then look to kind of reverse lower. And so here it looks like it's kind of starting to, this is kind of what I was talking about. You know, we have two big spikes here, and then, you know, we'll kind of see how this pullback plays out. The ES is kind of doing the same thing. Ideally, I would like to see this uptrend break. If I actually pull up my checklist here, reversal, unhealthy move, not really quite there. This could definitely just be trending up right here. So that's why I'm not getting in yet. Because to me, the trend is still there and it's not broken. And so, you know, this just could be a little pullback, right? This could be a little bit of a overextension. And if it just pulls back, like this is really small, read into it. But if we just look at kind of this move, a 50% pullback of that move to show that it's a healthy pullback is really right here. And so this could just be pulling back before it continues higher. And that's just using a Fibonacci tool. But if it keeps going, makes a lower high, I think we definitely can get some downside action. And if it just spikes halfway down the move, well, I'm not going to get anything. So hopefully that doesn't happen, but that was a pretty big spike right there. But this is kind of, for those of you who missed it, earlier I talked about how big spiking candles can cause a lot of FOMO. And I used to jump in on these thinking, oh shit, I'm going to miss the move. And a lot of the times this is a trap. And it will reverse this whole candlestick. And if you jumped in here, you would be probably down money and hurting. And, you know, maybe it continues lower. And this is the start of the trend. But it could also continue higher. So I want to see how the market essentially reacts to this. I want to see it kind of pull back in a good way. And then potentially look to get short. But right now it's I don't want to get in yet. But this is a nice potential topping pattern here of a head and shoulders on the NASDAQ. And the ES also looks like it's got potential there too. And I might actually take, if this sets up, I actually might take the NASDAQ because the NASDAQ's looking a little cleaner. And the last few trades that I've taken, the NASDAQ has worked out better. And so that's kind of what I want to pay attention to. But to me, like that looks like it. That random spike that just seems out of nowhere could be a trap. That's annoying. So I would say that is an unhealthy move in the sense of it's a nice topping pattern. Just switching my charts over. I think I will get short NASDAQ instead. Just because on a I think it's looking a little better. I would say we've definitely broken the trend, and I'm just kind of looking for a reversal pattern here of this kind of go lower. And I'll probably put in an order at the low here if it breaks all the way down there. ES is looking the same. And, you know, just kind of looking to give this move back up. We pretty much tested the overnight highs. Now this could just go like this. And so that's why I'm not entering in yet, because I think it's at that kind of inflection point where it either sells off or it pulls back a little and keeps going higher. You know, we could turn into kind of a trend like this. And so this is a nice looking bearish candle if it ends up closing. But if it ends up just kind of gobbling that back up, I'm less interested. Because again, my bias for the day was choppy and slightly bullish. And I'm just looking at I have the ES on my left side now. But that's kind of looking pretty much the same. I think the NASDAQ definitely looks a little better. And I like to get in down here just because it's a break of this low. And I think the idea of if we break this, that's kind of like a support that'll just kind of get going. And it's nice to see kind of a spike there get gobbled up. I think at this point it's shown me enough that I'm going to just put an order there. This overall pattern I think is really good. You know, kind of what I talked about, it getting a little frothy to the upside. Just kind of waiting to let it fill me. Oh, I don't have the right at the money order there. That was good thing I didn't get spiked out. So at this point, like, I don't necessarily think it's just going to puke lower out of nowhere. I think it's likely we get some kind of pullback before we accelerate a little bit. ES looks the same. It hasn't actually broken this level yet. That's why I'm kind of entering in the NASDAQ here. I think the NASDAQ looks better to the short side. And kind of looking at targets is definitely looking at this pre-market level here. That's kind of the first target. The actual open price, because definitely that's important to look at, is kind of right here. And so I think if we break down to here, and even just looking at like this level here as kind of a spot, we could just come down here and bounce and continue higher. If the market overall big picture trend is going to play out, that'll be definitely a spot where that happens. I'll probably go break even when we've moved all the way down here. I want to give this market time to come back up here and sell off. It's totally healthy if it comes back here, has this kind of pullback, and gets lower. And then just kind of looking at a 5 minute, you know, I'm just looking at and even a 15-minute here. Just looking to see us essentially testing this all-time high, we're basically doing a fail breakout of the pre-market high right here. And I'm just looking to see us reverse off of that. And on a 5 minute, kind of same thing right there. And we kind of got to let things play out. Risk reward, I think, is good. I think 2x, if we get going, is pretty likely. And then obviously if we get going further, I think there's a lot of support down here somewhere. That 3x might be kind of hard. But I think shooting down here, I'll be able to get out at break even, and then slowly start to take some profits. This is on the ticker I'm trading is the NASDAQ futures. Just to quickly walk through the trade I entered in here. And my checklist, since I'll just uncheck it since I'm in a trade now. So it's easier to see. But essentially what I was looking for was we kind of hit the pre-market highs here. And then we kind of got a little too excited. And then there was kind of a bait candle here. And then we made a pullback, lower high. and then looking to get lower. Essentially, we made a head and shoulders right here. It's not super clean, but you can kind of see left shoulder, head, where it got too excited, pulled back, right shoulder, and then we're going down. And we're kind of hitting 10 o'clock. I'm going to remove that. This line right here is the pre-market open, or sorry, just the market open price. And I'm just kind of tracking levels where I think we might slow down. We've broken this one. And I got in the NASDAQ this time because the NASDAQ's just been better trading the last few days. And so I'm kind of watching that instead. The ES here has barely even budged. It's looking good to the downside, but the NASDAQ's definitely a little better here. And I want to see it I think I want to see it get down here a little bit more before I go break even. Just because I think we could totally bounce here, pull back, and then continue lower. So I don't want to get out of this too soon here. But as we accelerate here, I'm just going to trail my stop down half. We got going a little bit more there. I'm going to trail it down to kind of the high of this candlestick here. I think this looks good. Just kind of letting it do its thing at the moment. Definitely the first major target is just giving back this initial move. I think once we get down there, and if we get down there with these kind of candlesticks where it's just spiking a crazy amount, I'm going to be trailing my stop pretty quick. In this market, I'm fine getting out at 1 or 2x if it gets down there. But also I want to keep in mind that we could just start to go crazy. The NASDAQ is the S&P 500 is starting to follow through too. This candlestick to the downside is overextended. And so I want to see how the market reacts to that. Ideally, we just do a little pullback and keep going lower. And I'll probably trail my stop up like there. I'm not looking to get out at a limit because I could see this accelerating to the downside. If this breaks lower, I'm going to move my stop down to above this candlestick right here. Just because I want to kind of capture those profits. Because if it's going to keep going, it's going to keep going. And if it's going to snap back, it's going to snap back in a big way. And the trend might be over. I'm going to at least move my stop to above this candlestick. Trying to give it a little bit of room, but also realizing we're at the lows here. The S&P 500 is looking good too. Another good spike. I'm going to move my stop down again. It's starting to slow down a little here. And it looks like it might just pull back and stop me out here. Yeah, it did. So, out on that trade. Not crazy big. But I think in this market, I'll take what I can get. Hindsight, maybe I should have just got out of the lows. But to me, it looked like it had potential to really accelerate here. And so I thought it was worth it. Essentially risking, I don't know, maybe I risked like half a R, half a risk here to see if it really had downside potential. So, maybe I risked like $700 to see if I could make another 2,000. I think that's, considering mid-trade risk reward, I think that's totally fine. And I'm definitely happy getting out on a bounce like that. So just to kind of look at the actual numbers here, closed for 1,700. So, about a little bit over one to one, which isn't mentally. I like getting 2 or 3, but I'm also getting better at being okay with taking one, especially at my size. One is still, you got to keep yourself grounded. Like, that's still good money. And then also not getting married to try and getting a larger amount, just with, the market's telling you that, hey, get out down here because that's what it's going to give you. I entered in, you could say, halfway through the move anyway. And so, maybe if I was more aggressive up here, I would have got better. But, to me, I wanted to wait for this confirmation, and then getting out kind of here where I thought the confirmation that bounce was happening. So I know I went through that pretty quick and wasn't looking at chat. Let me know if you guys have any questions on that trade. This could still totally keep going lower. There is, maybe there's this downtrend right here. But to me, seeing this big candle accelerate, this bullish one start to, start to slow down. If this was going to keep going lower, it would have just had this bullish candlestick here, and then it would have produced another one. In the sense of if it was going to keep going lower in a very aggressive fashion. And I wanted to allow myself to hold through that to see, I essentially risked this amount to see if I could get this amount. And risk reward wise, because that's kind of what you want to think about in trading. I guess you could say technically I risked this amount to see if we had this amount. And who knows how much farther it could have gone down. It could have gone down even more. But if I just use my risk reward tool, I was essentially risking one here to make two. And so that's still good risk reward ratio. That's how you want to think about managing, is you want to, as you're trailing and thinking about, okay, my next target, is it worth holding here or not? You want to think about the risk reward as it's adjusted, because every time you trail your stop, your risk reward has changed. You're risking however much profits you're up if you close out right now versus, it's not based on where you previously entered in anymore. Candle had a huge spike. How do I keep patience? Practice. Actually, I would highly suggest, based on that question, once I end the stream, go back to the start, and I kind of talked through a really good technique to help you deal with the impulsivity of big candlesticks. Is it optimal to trade the opposite when I exit? No, I don't think so. I personally don't do that. I have tried it in the past, but what I've actually noticed is a lot of the times the first reversal that the market makes in the morning is the one you want to pay attention to. After that, it could reverse, but a lot of the times this reversal will set the trend for the day. And so even if, we're at a support level here, like if we look at the checklist, unhealthy move, reversal zone. This is a nice, honestly, rejection candle of this low here. I would say this trend looks like it's breaking, and we might be putting up a higher low here. And so I think checklist wise, there is totally validity in betting in long right here. And it might totally work because of the back and forth market we're in. But for me, I like to just focus on taking that first one, because a lot of the times this won't actually do that. I think the percentage chance of it actually playing out is a lot less than this first one right here. This can turn into chop, this can reverse, or the trend can continue lower. The market's already showing you there was a big rejection of the highs up here. But I could totally see today, I could definitely see the big picture bias taking over, and this just being a pullback in the healthy move higher. I haven't even looked at what oil was doing. Oil looks like it's just sitting there doing nothing. And so I could see this working out, but to me, it's not something I'm going to take, just because that's kind of my rules and how I've let things play out. Can I show that this is a real account? I've hidden most of it, but on NinjaTrader, if you have a real account, this is numbers right here. It would say sim. Obviously, I'm not going to show all the numbers, but that's hopefully enough validity for doubters. Just trying to go down the questions here. How many contracts did I trade? I can actually turn this back on. Let me. I don't even know. My system just the way I have it set up, it just automatically does it. I traded 2 NASDAQ contracts. And where'd this go? Made like 1,700 from it. Do I look also at the principal tech action DXY to confirm that my trend? I don't even know what the DXY is. I'm assuming that's maybe the Dow. Oh, the dollar. I don't. I think there's you can look at so many charts and confirm so much that I just don't find it worth it. At some point you got to say no to adding more and more. Do I always trade live? I am actually starting to always trade live. I am doing this pretty much every morning that I trade, ideally 4 to 5 days a week. So I will be on tomorrow. How much margin for 2 contracts? Oh God, I don't even remember the NASDAQ. What is the NASDAQ margin? Let me look. Let's see. NASDAQ, if we look at NinjaTrader, because that's what I'm using, the NASDAQ here is $1,000 per contract. It's more than the ES, actually double. I like trading the ES better because at my current size, depending on where things are, it's harder for me to get closer to my target. Sometimes it's like, oh, if my entry's here and my risk is here, it'll be $1,000 per contract. And so it's kind of, I like the ES because I technically can trade 4 or 5 contracts. And so it's a little easier to target my risk. How often does the market give these reversals? I don't have data for consistency, but I would say on average, I take 1 to 3 trades a week. I mean, this week I'm at 3 trades. But it totally depends on how the market is. Some weeks are good, some weeks are not. I didn't actually, I went full size on that trade. I risked about $1,500. And so to me, that was full size. This checklist thing that I have is using a platform called On Top Replica. I kind of just use it for streaming. Just because it's easy for me to put on the screen. Yeah, so margin contracts on TOS are like ridiculous. I would say if you want to trade futures, check out NinjaTrader. I have a link in the description. They have super small intraday margin requirements that allow you to trade with a really small account. That's just like such an easy way to get into it. And if you trade the minis, I keep getting mixed up which one. You can do a lot better. In terms of it only requires $50 worth of margin. If you go to my YouTube channel, I have a lot of in-depth tutorials. You can use Tradeovate on a Mac. You also can use NinjaTrader on a Mac, just the web-based version. It's literally NinjaTrader owns Tradeovate, and I think they're actually going to maybe, don't quote me on this, but actually discontinue Tradeovate because the NinjaTrader web platform is literally a copy of it. And so the cost per trade on NinjaTrader, if you're talking about fees, let me see if I still have that PDF up. This is on the brokerage side, I'm assuming you're meaning. Just to pull this up, I literally Google margin requirements NinjaTrader PDF, and this is the first link that comes up. For NinjaTrader, like let's see, on the NASDAQ today, I have the lifetime version. But if you look at this, let me see if I can blow this up. The fee here for one NASDAQ contract round trip is a $2 basically. And so that trade fee-wise costed me $2. And so to me, that's nothing in terms of how much money I made and risked. Even on the free version, it would be basically round up $3. And so I would say still the fees are nothing. And that's a big reason why I say you should, that trading smaller amounts, trading less is way better. Because if you trade 10 trades a day and you're scalping, fees eat you alive. If you start with futures, is it better to do it with your own capital or prop firms? The route I like to preach is demo trade first on something like NinjaTrader, because it's not worth risking real money or prop firm fees. You're going to make mistakes. Just get used to the platform, used to the strategy, show consistency demo trading. And then I actually think it's better to go with real money, because you can start risking like $20 a trade on the micro mini ES futures, the MES. And this allows you to start getting used to the mental side of trading, which, if you watch my live streams, it's extremely important part of trading. And it's honestly what makes you from not profitable to actually being profitable. And so that's why I think it's better to go the route of slowly scaling. I think once you get up to maybe a certain amount of money and you're consistently with real money, then you can try prop firms. But I don't like prop firms because they put like constraints on you. They mentally, well, as a beginner, it's really hard for you to actually be consistently profitable doing anything. And so account resets, everything that eats you alive. You're essentially paying hundreds a month potentially to just demo trade, with the hope that you could get like $100,000 account. And then I literally had someone email me about this the other day. They were freaking out. You get to a $100,000 account, and then all of a sudden in your brain, I'm about to make $5,000 on this trade. Mentally, you can't handle that because that's a crazy amount of money compared to what you're used to, And so I think you have to slowly scale up. Prop firms just take you from 0 to 100 and just kind of screw you over. It's statistically, the amount of people that make money on prop firms are the exact same amount that make money trading profitably. And so, they make a ton of money off of people failing. I do have a video about setting up NinjaTrader on my channel. If you go to my homepage, there's a playlist that has it in there. I just went over the fees for NinjaTrader. It's like basically $3 round trip for one NASDAQ contract. How consistent do you need to be on demo to start switching to prop firm or real money? I think at least 2 months is a good starting point, because over a couple months, potentially the market goes from between multiple cycles. It's very easy to, as a beginner, to get lucky and have your strategy work out really well because it's working. Like let's say you're a continuation trader and the trend's a massive uptrend. You're going to make money because it's favorable for your strategy. What you have to learn how to do is adjust to when the strategy doesn't fit your strategy, when the market, doesn't fit your strategy. That's where people blow their accounts and lose money. NinjaTrader, you literally only need like a $4 monthly subscription for fees, for data, and every platform you demo trade on, requires that. A lot of them are more like $10, so NinjaTrader is pretty cheap. If you're not, if NinjaTrader is not available, honestly, I don't know. It's hard to know exactly what's available in other countries. You're probably just gonna have to do some Googling and try and figure it out. It's sorry, I can't really help there. And then fees for like the micro versions, they're, you can look up that PDF and it'll tell you. They're definitely a lot smaller. Yeah, pretty funny that just talking about how the second reversal didn't play out. And that's something I've just learned over time is, even though this set up exactly how my checklist said, the fact that I just knew to not take it saved me money right there. Technically, I'd probably still be down here with my stop, but I would not want to be in this right now. So I'm not going to look for another trade today. I think at this point, I'm going to call it. If you are new to futures and trading and my strategy, go check out my YouTube channel. I have a ton of videos that are very polished, focused at teaching you a lot of the basics. So you can come in and have a better understanding of, what I'm doing, what we're looking for. I appreciate everyone being here. I will be on tomorrow. And, again, I'm consistently starting to do this. So good trade today. I think at this point, it looks like it's just going to chop the rest of the day. My strategy is looking for that first reversal. I'm not looking for anything else. So happy with that trade. Happy how it worked out. It was pretty dang textbook. So we'll see what tomorrow brings. Have a good rest of your day, guys.